Good morning, good afternoon, good evening. Whether you're listening live or you come back and listen to the recording later, I'd like to thank you for joining this session of Injecting Security into Cyber Insurance. Injecting Security is a series of monthly roundtable discussions that started at CLASS-LLC's annual summit known as the Cyber Strategy Retreat. The series stresses the importance of integrating security into critical business activities and initiatives. Today, I have the pleasure of diving into cyber insurance with my good friend, Lauret Howard. Lauret has extensive experience in this area based on her previous work at NASCO and her current work as one of the leaders of the Association of Strategic Planners and as a strategy consultant. Not to mention, she is also a member of the advisory board for the Cyber Strategy Retreat, where she has provided valuable insight. To begin, my name is Keon Williams, and I have the pleasure of serving as the official host. I have a background in many areas, but cyber insurance has been one of the areas that I've focused on for the last 6 months, so much so that I've written articles for the Crisis Response Journal and other publications about cyber insurance. My hope is that what Lauret and I have to share today is going to add value to your insight and your understanding about how you apply this important risk management tool to the protection of your organization. Before we go further, I'd love for Lauret to have an opportunity to introduce herself and give you a little bit of background that she's bringing to the table for the conversation. Lauret, you have the floor.
Thanks, Kian. So as Chief Risk Officer at NASCO, I was responsible for getting our first cyber insurance policy. And it was quite a daunting task. At NASCO, we were a privately held company that offered back office services to Blue Cross and Blue Shield plans. As a result of our tremendous growth, we provided enrollment and billing, claims processing, and customer service IT systems for over 25% of all Blue Cross Blue Shield members. It's about 25 million people, and processed over 300 million claims per year. And since we had to retain that detail for many years, we basically had over $1.5 billion of claims. So that's a lot of PHI to protect. And certainly within the healthcare industry, there's significant regulatory requirements that required us to follow certain protocols and certifications. And if we did have a data breach and had exposure of personal health information, then there were material fines from the government. So there's a lot of compliance work, but cyber insurance was a key risk management tool, as Kian mentioned, that we had in our toolkit. We put a lot of work into making sure we certainly had all of our security controls in place. They were operating effectively. But in the end, if we did have an incident, we wanted to make sure that we had the coverage to be able to cover the expenses of recovering, notification, potential regulatory fines, et cetera. So we carried $90 million worth of cyber insurance at the time I retired from NASCO.
And I thought the introduction would be important because it adds some credibility to the people who are leading the conversation today. As we go forward, I have a couple of items just to set the stage and make sure that we're all speaking the same language. Item number one, and this goes to cybersecurity education, what you see in certification programs, what you see in academic degrees. In all of those cases, they tell you that insurance is a risk management tool that helps you transfer risk. In reality, part of what we'll talk about today is the positioning of cyber insurance really as a business continuity tool rather than as a risk management tool. I say that because insurance is a contract represented by a policy that provides financial protection against losses. Usually with cyber insurance, if you have a claim that is paid by the insurance company, the monies that are provided are not really going to reduce the risk to the organization directly, but it provides the financial resources necessary to do forensic analysis, investigation, and perform all of the activities related to your remediation so that you can continue the business activity at hand. Your insurance policy is always going to contain 3 elements, and these are the elements that you want to review with significant scrutiny so that you understand what you're getting, what your obligations are, and what your limits are related to the contract. Number 1 is the premium. The premium represents the price paid for the insurance policy, which is determined by the insurer based on the risk profile of the business. As we move forward, and as I'm sure Lauret has some great insights, the risk profile varies widely across organizations based on the data involved and very often based on the response to the insurance questionnaire. Number 2, the deductible represents the financial obligation of the policyholder. This sets the amount paid by the insured before the insurance company will pay a claim. Deductibles protect the insurance company by discouraging the insured from making numerous and significant claims. And then number 3, the policy limit establishes the maximum amount the insurer is willing to pay under a policy for a covered loss. All of this becomes important because cyber insurance is a category of specialty insurance that explicitly protects businesses from losses caused by specific events that are covered by the policy. And so you could have a policy for data breaches. The definition of a data breach becomes important, and your data breach policy is only going to cover items that fall within the scope of that concern. And so, Lauret, I'll turn it over to you real quick before we go too far. At NASCO, you saw a lot of insurance activity, both for health insurance on the provider side, but then also for cyber insurance, professional liability insurance, general liability insurance as the provider of services, but also making sure that you're covered. Can you talk a little bit about what the ecosystem looks like today and concerns that people need to consider related to the premium, the deductible, and the policy limits for cyber insurance in 2022?
Well, thanks, Ken. And you're absolutely right. Cyber insurance really is part of your business continuity planning so that you can make sure that you've got the means and resources, which includes access to knowledgeable individuals, as you mentioned, the forensics, notification, et cetera. What the trends have been over the last several years is that the demand for cyber insurance has gone up greatly. And unfortunately, the number of claims has also increased substantially. And what we're seeing from the insurance companies is that they are starting to do much more due diligence on whether they want to take you on as a customer or not. You mentioned the risk profile of your company. You can't just go out and buy a policy and not pay attention to your security controls. As the payouts against premium have gone from, I'll call it the old days when I was doing it, from about 43 cents on the dollar, it's now up to 73 cents on the dollar. So you've seen a lot of insurance companies exit the market in total. And then, as I mentioned, others are doing a lot more scrutiny. So beyond just filling out the application, they want to look at audits of your security systems. They want to look at certifications that you have. They want to understand how you conduct business, but also get a sense of what is the security culture of the company. The number one vector or the number one issue continues to be phishing. And that all gets down to the individual and how well do individuals recognize these phishing attempts. These bad actors have gotten very good at disguising themselves and looking like a valid email. And we're also seeing it now in texts and phishing phone calls. So they're coming at the employees from all directions. So giving the insurance company a sense of the security culture is really important and goes a long way for them to see you as a relatively good risk to insure. The other thing that's important is you mentioned all various types of insurance that companies carry. And most of them really do not deal with the issues that cyber insurance does. As you called it, a specialty insurance. I think that's a great way to put it, because your E&O insurance isn't going to cover it. Your D&O will give some protection to the board if there's a derivative lawsuit filed as a result of shareholders believing that the board did not exercise their fiduciary responsibility in effectively having a security program, effectively funding the security program, and having good oversight of the security program and the controls. But the rest of the insurance, property casualty, isn't going to take care of that. Professional liability isn't going to take care of cyber issues that arise. So it's very important, regardless of what industry you're in, to be able to obtain and retain the cyber insurance. Just because you are underwritten as a new customer doesn't mean you're going to be able to keep it, because the insurance company is going to come back every year and reassess your profile, reassess your risk rating, and determine if they want to underwrite you. We're also seeing lower limits. So as I mentioned, we carried $90 million of cyber insurance. There was not a single company that was willing to underwrite the entire 90 million. So we actually had to create segments of 10 million and in some cases 5 million, and basically created a tower until we got to $90 million in coverage. Now, typically, whoever's going to be the primary underwriter is the one with whom you're going to complete the application, and they will do the assessment. So if you do experience a breach, they will be the first to pay. Then what we find is that the follow-on insurance companies will typically accept the terms with that primary cyber carrier to be able to provide complete coverage as needed. The key is making sure that you can present yourself as a good risk. One of the other areas that they'll look at is what industry are you in? So healthcare on the payer side. And when you may recall, there were 4 Blue Cross Blue Shield plans that were breached, the biggest one being Anthem. And we were, even though we didn't sell health insurance, but we were a provider to them, a subcontractor to them, we were basically lumped in that same category. So given that the industry in which we were put in had experienced numerous breaches, it was even more, I'll say, pressure to be able to demonstrate that we were a good risk.
It's a great summary, and it brings up one of the items that I had in my notes, that the relationship between the insurance company providing the cyber policy and the company that's being insured really requires a balancing act. I almost started an insurance company once a long time ago, and from the insurance company's perspective, there is a huge expectation that the companies that you're insuring have good practices that limit the probability of paying a covered claim. In a lot of cases, there's a cliche that insurance companies are in business to take in premiums but never make a payment. But it also begs the question about the solvency of the insurance company. You know, the same thing happens with flood insurance. If you have houses in a flood zone, flood insurance is going to be much more expensive because the likelihood of paying a claim should make the insurance company unable to do anything else or unable to stay in business. And to achieve that perspective about whether the risk is good or bad related to companies, the insurance company is often going to perform a cybersecurity assessment. Now, that assessment is often consolidated into the insurance questionnaire. The questionnaire is usually very binary, but what I found in conversations and materials from large insurance companies like Marsh or Aon or some of the other very large providers, there are 5 minimum requirements for insurability if you're going to get cyber insurance as a specialty insurance product, especially if you need something like $90 million. And so what I'm finding in 2022 is that if you don't have multi-factor authentication, advanced solutions like endpoint detection and response, secure, encrypted, and tested backups, a good solution for privilege access management. And fundamentally, going back to what you said, Lauret, about phishing, if you don't have good email filtering and web security, it almost demonstrates to the insurance company that you're not a good risk to take on and that you're likely to have to file a claim you're likely to have to file a claim in the future. And so thinking about your experience and thinking about those controls, what are your thoughts about the importance of those controls as the fabulous five that establish the foundation for any kind of issuance of cyber insurance?
Well, I would absolutely agree with you. I like that, the fabulous five. I'll have to steal that from you. But yeah, but for those of us in the security realm, that seems very basic, but it's surprising how many companies haven't done that. Now we've seen a decrease in certainly in the healthcare sector, a decrease in the number of successful attacks because, and banking and financial services as well, because those were the ones in the early days that were continuously being bombarded with threats from bad actors. And so these industries really took it seriously, put in the controls, again, a lot of that for their own, protect their business. But as I said, with healthcare, there's a lot of regulatory requirements that you have to meet as well. And again, I go back to something I said earlier that I can't emphasize enough. It's about the culture of the company. So in your company, do people think about cybersecurity as that's an IT thing and I don't have to worry about it? Well, everybody has to worry about it, and you have to really get them to understand. And that is, like I said, a key practice that you can basically show the insurance company what you do to help your employees be part of your security program. That it isn't just one department's accountability, it's every single employee's accountability. And so I think that's the underpinning. And then the things that you mentioned have helped deflect so many attacks. And we're seeing now, as I mentioned, healthcare and financial services have gone down, but the largest number of attacks are coming in the manufacturing industry. We all are familiar with the Colonial Pipeline situation that happened. When was that? Earlier this year? Time goes by so fast. But that's being seen in North America as well as Europe. Asia experienced a high number of attacks, a lot related to the Olympics in Japan. So having that fabulous five security components are really going to go a long way to getting you started, but you really have to look at your business, your geographic locales. You have to look at, what data do you have and what's the value of that data to the bad actors. And that should give you guidance as to the appropriate controls that you need to install. And I'll just add one other thing. I mentioned certifications and compliance. I'm a big believer that compliance is an outcome. Compliance is an outcome of having a good, strong security program that looks at processes, technology, as well as people. And that's going to give you a big lift when you go to these insurance companies, complete that application, and you're not just crossing your fingers hoping they're going to cover you.